One of the few investors, Michael Burry, who predicted the financial collapse, worries that the present market chaos may be the beginning of a much worse tragedy. In today's video, we'll talk about the crash that will change a generation. Michael Burry worries that the market turbulence could signal a catastrophe even worse than the financial crisis. He expressed worries about rising interest rates, erratic currency markets, and retaliatory central banks. Last year, the Big Short investor identified a historic asset bubble and foresaw a catastrophic catastrophe. Stay until the end to learn it all. In recent years, Michael Burry has taken to Twitter to rage against stock valuations, cryptocurrency bulls, and overall dangerous investing activity. He is best known for correctly anticipating the collapse of the housing market in 2008 and prospering as a result. The CEO of Cyan Asset Management, depicted by Christian Bale in the 2015 film The Big Short, warned Bitcoin investors of the impending mother of all crashes in June 2021 and referred to the stock market as the largest speculative bubble of all time in all things. Since then, the S&P 500 has dropped by more than 12%, while the blue chip index has dropped by 21% during the past 6 months. On Thursday, Burry did issue a warning that there might be much more misery to come. Inflation-adjusted S&P 500 and Nasdaq declines in the 2022 first half total to 25 to 26%, 34 to 35%, and 64 to 65%, respectively, he tweeted. Multiple compression was used there. The S&P 500 index made a major comeback following the pandemic crash in the spring of 2020, rising from a low of 2,192 points to 4,089 points. On May 3rd, Burry tweeted that it might decline by 54% to 1,862 points during the ensuing few years. Burry emphasized that the S&P 500 has typically traded less favorably years after a crash. He referenced the index bottoming out at rates that were 13% lower in 2009 than they were in 2002, 17% lower in 2002 than they were during the long-term capital management fiasco in 1998, and 10% lower in 1975 than they were in 1970. If Burry is correct, and the S&P 500 still has another 25% decline in store for it, the index may fall as low as 2,800 this year, after having posted its worst first-half performance since 1970. That's a sizable decrease, but it's still not as disastrous as what Burry predicted in May when he suggested that the S&P 500 would go as low as 1,862, based on a historical examination of past bear markets. As a result of Burry's frequent predictions of impending economic catastrophe, some contend he is nearing boy who cried wolf territory. Elon Musk even called him a broken clock in November 2021. On May 19, 2005, Michael Burry made his first credit default swap transaction in anticipation of the housing crisis. With $10 million on each of 6 different bonds, Deutsche Bank has provided $60 million in credit default swaps. He correctly predicted that corruption and greed had progressively turned U.S. mortgage-backed securities, long a trustworthy and respected investment product, into a ticking time bomb. This bet, in his opinion, was not a gamble. He came to the conclusion that subprime mortgages, especially those with teaser rates, and the bonds based on these mortgages, would lose value once much higher rates replaced the initial rates, frequently in as little as 2 years after initiation. This was based on his analysis of residential real estate values. He was able to short the market as a result of this conclusion by persuading Goldman Sachs and other investment firms to sell them credit default swaps against subprime deals they regarded to be vulnerable. In September, Burry tweeted, "Today I pondered out loud if this might be worse than 2008. The message has since been deleted." He continued, "What interest rates are doing, exchange rates around the world, central banks seem reactionary and in CIA mode." Burry probably meant the Federal Reserve and other central banks who were rapidly boosting rates to tame stubborn inflation. The US dollar has reached record highs versus other foreign currencies, such as the British pound, due to the Fed's aggressive rate hikes, as well as external factors like the Russia-Ukraine war and China's ongoing lockdowns. In addition, the Bank of England started a $70 billion, $65 billion bond buying binge this week because the UK's financial stability was being threatened by rising gilt yields. In an effort to support the Chinese currency, the People's Bank of China is apparently getting ready for state-run banks to sell dollars and buy foreign yuan. The tech-heavy Nasdaq has fallen by 27% this year. The benchmark S&P 500 index has fallen by 19%, and the price of Bitcoin has fallen by more than 66% from its peak in November to under $19,000. At the end of June, when asset values reached comparable levels, Burry issued a warning that based on the history of downturns, the crash might not be over yet. This year, the prices of many of the most well-liked meme stocks have collapsed. AMC Entertainment fell by 69%, GameStop fell by 34%, and Bed Bath & Beyond fell by 54%. Similar trends have been observed with the top special-purpose acquisition firms. Shares of Virgin Galactic and Lucid have also decreased significantly this year, by 57% and 64%, respectively. Burry argued repeatedly that the pandemic-era booms in meme stocks, cryptocurrency, SPACs, and other trendy assets wouldn't persist. Since the year's beginning, technology stocks have been particularly depressed due to the unfavorable backdrop of rising inflation and interest rates. Therefore, it would surprise some to learn that Michael Burry has invested in Google and Facebook, Meta, Alphabet. These two stocks have never before been part of Burry's holdings. He owns 65,000 and 80,000 shares, respectively, of Alphabet and Meta, the fourth and sixth largest positions at the moment in the portfolio. The tourism sector, on the other hand, keeps a careful eye on both the strength of consumer spending and the effects of inflation. Vacations are sometimes viewed as an opportunity to loosen budget limits or even to increase savings. Poor outcomes in this area can be considered a sign of a recession in any event. Following the merger of Warner Bros. And Discovery, Burry purchased 750,000 shares of the new firm, moving it up to the third-largest stake, despite the fact that Warner Bros. Discovery's stock has lost 25% of its value since the beginning of 2022. Burry may have been attracted to the business because of its bright future rather than because of concerns about debt or the company's place in the crowded streaming industry. The company estimates free cash flow for the coming year to be $3.65 per share based on computation. Taking into account the stock's current price, that would equate to a 20% return on each share. On the one side, Burry predicts significant crashes. On the other, he bets on a robust tech rebound, robust vacation numbers, and success in the streaming business. Burry seems to portend terrible news just for Apple. Michael Burry's investments for the following months are totally up to you to decide. However, having such hints is always intriguing because they make you think. There is still work to be done, according to Michael Burry, and the turbulence in the bond markets may cause equities to decline. Since it becomes more expensive to service debt, which has an impact on profitability, higher bond yields are typically correlated with lower stock prices. Because financial analysts utilize discounted cash flow valuation techniques, which result in lower future discounted valuations the greater the discount rate for future cash flow. Interest rates also have a negative impact on stock prices. Michael Burry, however, maintains that there are excellent investments in the value sector that are reportedly trading at a low price to free cash flow valuations. It is crucial to purchase businesses that have very strong balance sheets and a promising future for producing free cash flow, because they can buy back their own debt at reduced rates if they can do so with their own cash flow. Organizations with debt can nevertheless appear to be desirable. So do let us know which topic we should cover next. If you enjoyed the content, give us a like, and please subscribe to know more. See you at the next one.